Woohoo! Another day still alive. Yeah, love it, baby. My son woke up sour today, so I gave him a big hug. I said, nope. The secret to happiness, son, is making somebody else happy. And you'll be surprised what happens next. So that's how I sent him off to school. Go find someone and make them happy. It'll change everything for you. Whew. So you make me happy. I thank you very much. So I'm going to give you everything I possibly can to help you become a successful Forex trader. So let me tidy up the office a little bit, and then we'll get started. Oh, yeah. Another day, another reason to get up and make some pips. However, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. Been trading a long time, publicly more than 10 years now. And I'm here to share my experiences with the overriding goal of making you a better trader, so you can learn from my failures and you can steal my secrets, the things that I learned from blood, sweat, and tears for years, so that you don't have to go through that. I think you're going to be successful a lot faster. And that's the whole goal, right? We do these strategy sessions every single day, Monday through Thursday, here at Forex.Today, and every Friday at FXStreet.com. Hallelujah, where I am. Hallelujah, Speaker of the Year for 2016. Hallelujah. Cool. Thank you, FX Street. Thank you guys for your loyalty. That's what a chart looks like. That's what Forex.Today is. So just a quick review. Right up here is yesterday's trading session. Look at this. We trapped S&P 500, and it's generally up off that 4-hour 21. This is probably a 1-hour 55, but anyways. Very nice. So it's kind of up here towards that red line. Maybe getting ready to break out to the upside. Coolio. So far, today's posts. Are you guys you're on the email list, right? You guys get the updates? Set them up so that you get them faster. Wink, wink, nudge, nudge. So I hope you appreciate that. So Tyler's gave you a Euro USD London outlook, right? Guy is giving you a USD Kitty CAD. Sweet. Maddie's giving you his gold outlook. Nuno is looking at the 200 EMA on something. Lovely stuff, huh? The question is, are you leaving feedback for these traders? Look, they're real. Nuno's not a robot. Nuno's a good guy. And he has thoughts. And he takes the time and he looks at things. I mean, it takes time to do this, guys. You should leave him feedback. You know? No, a couple of comments. Very nice. Thank you, guys. But there really should be, you know, 20 or 30 thought shared or thumbs up or likes or something, huh? Oh, is that right? I'll look into that. I'll look into that. So they don't pop open, huh? That's what you'd like? Okay. Wow, that's a nice price action chart, Tyler. I don't know. Awesome. Look at this analysis. Awesome stuff, guys. Look at that. No one left Tyler. Gratitude to McDonell for guidance. It's like, oh, come on. You don't have to leave. I'm not even logged in. Well, thank you, Tyler. Anyways. So read the analysis. It's timely, and it's thoughtful, and it's original and unique. Leave some feedback. Give the guys some feedback. It's good for them. All right. So yeah, there's probably So I'll look into it, guys. Oh, no for mobile phones. Yeah, well, it should be. All right, you got it. All right, where's my mouse? You know what? I should probably get my drawing tool going. Let's get that going. Come on now. Let's see. Don't forget, markets are closed on Friday because of Good Friday. Okay, so it's going to be a short week. So look at this little down, up analysis. That's cool. All right, so that's Aussie. Let's start with Aussie yen. Why not? Okay, we got some sort of little action going in here. Top side, upside, downside. The last cycle never became oversold. Now it's kind of just getting in the first areas if you follow this line around. Just sort of getting in the first areas of resistance and already wimping out. Okay, if you see here, what it shows you is it's overbought. It's not coming down though, so it's not bearish. And some people say, oh, now it's bullish. Oh, that's not how I trade that. So, are you off Monday? No, I'm working Monday. I'll be on the other side of the planet. But, I'll be here. So, so some people bring in baggage from other places, so we got to clarify, the strategy here. If you're a bull, this is an interesting area for you to consider buying. Ideally, the next dip, and there's a dip here. Okay, maybe you're long on that kind of thing. You can see it was mediocre to begin with. All right, hang on, let me move this. But someone said the other day, this is bullish because it's overbought. Everyone's buying it, right? But that means you're long here. And no. I'm sure somebody trades it that way. And again, I'm self-taught, so maybe that's what all the idiots do. But I'm self-taught, so what I look for is on higher time frames, let's say, or on fundamentals or whatever. I make a long-term decision. And I decide either I'm a bull or I'm a bear. It probably has nothing to do with this chart. Okay? And this is something that you and I have been working on for a while. You make a decision, right? So maybe, you say, okay, we're above this breakout, so you're a bull. Maybe. I don't know. Honestly, I don't even care what, if you flip a coin, I'm a bull. I mean, I should say. If you flip a coin and say you're a bull, then fine, good, whatever. As long as you've made the decision. Making the decision is the most important. What goes into it? Pure luck, random. Again, if it's migration patterns of African elephants make you a bull on this, then good. At least you've made the decision. Versus just chasing price around all day. That's, a guaranteed loser. Okay? Yeah? Yeah, the stars are aligned. Oh, very auspicious. Oh, body I see it. No, very good. Right? Whatever. Dude, whatever. Just make a decision. And that's the part that eludes most people. Okay, so anyways, that's the most important part. And then I start looking at things like, when is it way oversold? Because if I'm a bull, that's when I want to consider buying, when the market's wrong. And ideally when the market realizes it's wrong. So it's not that it's oversold, it's that it's coming back into the trade zone. Okay, so let me clear this out. And you know, I kind of like that boxed in there. So let's redraw. Oops. Come on, drawing tool. Let's redraw that. Okay, fine. So really what we're looking at is you're already a bull and you say, huh, it was bearish, but now it's moving back up. It was bearish, but now it's moving up. It was bearish, but now it's moving back up. That's much more interesting. And then later on, the retest, I call that sort of a retest. Retest, you know, sort of, right? And so the stuff up here, some people say, well, it's bullish now, you should be long because it's overbought and everyone's buying it. I'm like, yeah, okay, well, where were you when it was oversold, right? Okay. And then one last comment on this, just to make sure we're clear. The most important part of this is not the oscillator. The oscillator is important, okay? But the most important part that you can't live without is you have, besides having your bias preordained, right? Is that you need to be at support. And again, I don't care what support is to you. Is it 83 the psych level? Yes. Is it the roll reversal? Yes. Yeah. Is it a pivot point? Well, I don't know, but it could be. If it is, that will be important too. You know, is it a fib? You know, at some point, honestly, it doesn't even really matter, right? Someone will say, you know, when I say, oh, look, it's a psych level at a pivot point and a roll reversal, and then inevitably someone always says, oh, and it's a 618 Fibonacci. I'm like, yeah, okay, good. That's good too. You know, whatever. There's always something, right? But as long as there's something, right? As long as there's something, if you're a bull and you're buying it at support, you could probably live off that. Now, if you're a bull, you're buying at support and it's oversold and starting to rise back up, well, all the better. Do you need the oscillator to live? No. Do you need the moving averages to live? No. So what's required? Two things. One, you have to breathe, right? And a lot of people forget to breathe. You ever find that? You realize that it's been 2 minutes since you pulled the trigger and you haven't taken a breath. And then the second part is, you know, you need to be at support as a bull. Now, I should also define that as if it's an uptrend, you're buying at support. Okay. What if it's a downtrend? Are you buying at support? Okay. Does anyone remember what I call that? Right out of the book? Okay. If you have a weight on the end of the string, and then you start spinning it around, the weight wants to fly away from you. Centrifugal force, as in centrifuge, right? But there's a reason that it doesn't fly away. It's on the end of a string. Centripetal is the opposite, right, force that the string is applying. Opposite and at least equal, right? Actually, probably it has potential to be stronger until the string breaks, right? But if you're switching around, it's the centripetal force flying toward you, really, the opposite of the centrifugal, right? And so what I would rather you be doing is trading this way, buying as a bull, okay? And that's going in the, let's say, the natural direction. That the ball wants to fly that way, and so do you. Now, the opposite equal, you know, is the centripetal. And what you're doing is you're buying at support and you're a bull. But what's the difference here? Well, the way I describe it in the book, it's half the reward. Well, let's do it this way. Half the money for twice the risk. Okay? And if you see this maybe on a 4-hour chart, could you be long on a 5-minute and scalp it long for 50 pips? Yes. That's how to do it correctly. And the cool thing is if you know your bull and you buy it here and it comes up 20 pips and then comes down, you're like, oh crap, I got to get out because it's a downtrend. And you know you're wrong. You're like, whoa, got to get out. Versus somebody that with no bias doesn't really know. And then they're like, oh, now I got to get short. And if it ain't going up, it has to go down. Can you imagine all the dumb amateurs that do stuff like that? Well, I bought it, lost money, so it must not be going up. It must be going down. So now I'll short it because when I went long, it failed. So now I got to short because I guess it's going down. Whew, remember those days? Well, I guess it's going down. What do you mean you guess it's going down? Well, I bought it and I lost money, so it must be going down. So now I'll sell. Oh, yeah, Sally. They really trade like that. I guess it ain't going up. Well, they don't last very long. Right? So anyways, you can be short-term long. And this is a little more advanced, so that's why I don't recommend it unless you really know what you're doing. But you can be short-term long, let's say buying on the 5-minute chart because you see this on the 4-hour, but really you're long-term short. Short-term long, trying to capture this alpha because you're trying to be smarter than the market. You know the market's down, but you're trying to squeeze blood from a stone, right? But then you know you're going to trade this one short and go for 150 pips. Right? So scalp, swing. Now that's pretty advanced because you're saying, oh, well, I'm long-term, I'm short-term long, but I'm long-term short. I'm buying it now so I can sell it overnight. You're like, what? Okay. Now, a couple of good questions here. Let me address them. Miles, make sure I don't miss yours. The one before that, somebody asked, how do you do the breakout? Okay. I love it. Participation, guys. It's participation with action involved. Nice. Lovely. All right. I love trapping stuff. Okay. Nick says, would you use tighter stops on those trades? What? Yeah, short-term long? Yeah, you're scalping. So, put it this way. How about 25 OCOs? Okay. If it's going to, let's say it goes up for 3 or 4 hours, that means you'll get 2 or 3 shots. You'll pick up 25 pips here, 25 pips there, depending on where in the site you are. And then when you're short-term, long-term short, then you might do like, let's say, a 5150 OCO. Okay. So 25 pips up once or twice, and then 5150 down, and you hold it overnight. Okay. Sally says, do you trade the same lot size on scalps compared to swing? That is a personal preference. I usually do. But, it comes down to your risk tolerance. If you're a professional, your disclosure document maybe. Because you don't want to put yourself in a situation where you're facing a 30% drawdown because you have 5 scalps open. It really depends on how you want to manage it. So the only right answer is whatever you believe is appropriate for your portfolio. So, for example, if I had 25 trades open, each with a minimum 100 pips profit, I can afford to take it. What if you have 10 trades open and they're all losers? You probably can't afford any scalp, right? But, Sally, I tend to, yeah, I tend to. But, psychologically, what if today you're having a losing day? Just, your first couple of trades just didn't work out. And, maybe you lost a little confidence or something. Yeah, you could drop your lot size for sure. And I'll do that too, especially if it's a confidence issue. I'll say, look, I need some easy wins here, right? I'm not in it for the money anymore. Just like I need to rebuild my confidence. And this is actually an important thing. Actually, let me go back to this other idea. I don't know, 5 years ago, 6 years ago, I can't remember. I went through a period. Actually, it was just a day where and I don't know why it happened, but I made every amateur mistake under the sun on one particular day. I don't know. I went crazy. Maybe I was on weird medication or something, which is not likely. But so I don't know what I did, but it was horrible. I mean, I chased price and I added to losers and all these things. I don't know what happened. And all of a sudden I stopped. Okay. And I went, holy crap, what am I doing? Okay. And I was coaching back then, and I told everybody, I'm like, I've just had a stupid day. I really did. I told everybody, I just lost a pretty significant amount of money, and not good. Bad. I mean, it was the worst. And I said, look, for the next week, I am not going to trade. I'm not going to try to make money. I'm going to specifically rebuild confidence. So what I did is I dropped my lot size, so it really didn't even matter anymore. Win or lose, it didn't matter anymore. And all I did was 25 OCOs for about a week. Okay, that's all I did, but I made lots of them. In a week, I made probably 3 or 4 times more trades than I normally did, than a typical week. All very low lot sizes. And all I wanted to do is take good shots, hit them, hit the ball, right? Just hit the ball, hit the ball, hit the ball, hit the ball. That's basically it. Over and over and over again. 25 pips here, 25 pips there, 25 again. Take the next cycle, take another shot. There's a moving average there, just boom, take it. Well, Miles, my answer on that, Miles asks what time frame. All time frames, dude. Well, like, what do? Ignore the 4 hour? No, it all matters, guys. When I scalp the 1 minute, I cannot do it if you take away my 1 hour and 4 hour chart. I wouldn't know what to do. So I'm just playing every cycle I can. But the goal, guys, was to rebuild confidence. I'm like, you know what? I'm going to take these trades. They're not going to make me any money, but I will knock, 80% of these out of the park. Okay? And I'm going to feel good about it, and I'm going to rebuild my confidence so that I can stay strong, I can stay focused, I can stay disciplined. And I did it that way. Yes, not dumb trades, right? I didn't say like just throw spray bullets, right? I'm like Rambo. I'm shooting trades all over the place. No. More like a sniper, right? Pachow, got one. Pachow, got that one. Pachow, got another one. That kind of stuff. But close targets too. You know what I mean? Very close targets. I'm not trying to win a world's record. I'm going to hit things I know I can hit every time. That kind of stuff, right? And I just rebuilt the confidence that way. And it was really good. Now, the other thing I think I kind of recognized back then And it was something that I had talked about back then too, once, because I had just gone through that period. and complacency becomes a risk. What happened was I'd been doing pretty well. I think there was lots of yen trading at that time. This is when like the yens were moving 1,000 pips a day or something. And what happened was I made a lot of mediocre trades that were profitable because the market was moving. And throw down a trade, pick up some pips. Throw down a trade, pick up some pips. And after maybe a couple of weeks, several weeks, maybe a couple of months of just good market conditions and mediocre trading, what happened was I considered it like armor. Like, let's say I'm a knight and I'm in my armor and I go to battle and I get hit several times across the chest plate and stuff, and I got these little dents. Well, that's not going to kill me. And you go back out again, another battle, some more dents. It doesn't matter. I got armor on. It's 5, 6, 7 more days, more and more dents, and pretty soon the armor is getting weaker, isn't it? But I'm still out there. I'm still fine. I'm still winning. And all of a sudden, whoa! What's that spirit in my heart? Oh, well, your armor was weakened to the point where they got you. They finally made it through. And I kind of looked at it that way where, I need to spend a lot of time ensuring my armor is strong. And in this case, armor is confidence. And it was even more of a point, like even after trading for, at that time, let's say 7 or 8 years, I can't remember how long ago it was, I should have known better. I already learned those things and I still made the same stupid mistakes. And I realized I hadn't spent enough time on my armor. And that I just, it's just totally unacceptable. It was shameful. So I told everybody about it, right? Because it can't happen again. Okay? So sometimes the number one goal is just to ensure your armor is strong, right? You just can't ever chase price, for example. You just can't do it. Or how many times have you heard me say, well, we're at support. I can't sell it. I just can't. I'm totally incapable. And it's because I'm protecting my armor. Even if I made money on that, bad. In fact, the worst thing you could possibly do is make a bad trade and make money. And it happens. But the problem is you need to lose 3 or 4 or 5 more times to realize how bad the first one was. So a stupid trade that makes you money quick is got to be the worst curse that you could ever be given as a trader. Anthony, I don't know. It'll make Monday interesting, right? Yeah, Peter says he doesn't celebrate wins, right? You celebrate sticking to your rules. I like that. And also the funny thing about wins, like, why would, you shouldn't celebrate. I mean, you took the trade because you expected to make money, right? Like, what would be the big deal? Oh, really? You bought at support in an uptrend and you made some money? I mean, like, well, that's why you took the trade, right? Like, it shouldn't be a surprise. If you celebrate because you made a lot of money, red flag. If you made a lot of money, that means you took a lot of risk, and that is an epic fail. Okay? Epic fail. If you just went, holy crap, look at all that money I made, take that money and give it to charity. Okay? Now, the interesting trades are the ones that are losers, because you're like, wow, I thought for sure this was an uptrend, and that was solid support. So what happened? Did something change? Was there news? Did somebody say something somewhere? Like what did I miss? Right? Was it a monthly pivot point? Was it a daily pivot point? Like, just, now you got to go back and say, why didn't I make money? It should be a shock. Like, holy crap. Really? Can't believe it. What did I must have done something wrong. And that's probably different from what you're doing, right? Are you shocked that your trade doesn't work out and you have to search for what you missed in your analysis? Or is it a loss, just another loss, and then and then you're on to the next trade? So things. You know how I leave little notes for myself? Let me get rid of this because it's in the way. Where I say I'll do something like, a classic Wayne would be, let's say it comes down and it goes up or something. Well, let's do it differently. Let's say I'm a bull and I plan on it breaking out. Okay, let's say that was my analysis. Okay, and I'm playing this as a higher high, higher low, and we're going to break through. Okay, let's say I do that. I'm not saying that's a good trade. I'm just saying, let's say that was the analysis. Okay, and so in here I'm buying, basically, right? And I've left this note that, I think it's going to come down. I'm chasing this, and you buy it, and you have this note here so that when you take a screenshot to put it in your trade journal, you're actually not just trying to make money here, you're actually trying to predict the future. And so that let's say I lose on this one, I go back and I'm like, wow, I thought for sure that was a breakout. I had the oscillator, we kicked off the moving average, I had a 382. What did I miss? And boy, that's much better than, celebrating, woo, I made a bunch of money. Well, why would you take a trade if you weren't absolutely certain you were going to make money? Isn't that your job? What's your job? I'm a card. No, you're not. You're in it to make money with the least amount of risk possible. Who gets paid to trade? Your TradersWay. Your prime broker for your successful Forex trading business. Every time you trade, they have to enter the trade into the interbanking market. There are fees involved. They are charged, right? They have their costs. And it's a service that they provide to you. And their execution, compared to a lot of other brokers, if you test it, is quite fast. And someone has to pay for their fabulous customer service, that kind of stuff. So they have to add, a little bit of, fee there, which is a normal, you pay your power bill, you put gas in your tank to the gas station, right? You buy shoes, or you upset Nike makes a little bit of money making shoes for you. Well, yeah, they had to build $1 billion factory. So, so anyways, your broker gets paid when you trade. You don't get paid when you trade. So you should you get paid to profit. You get paid to do analysis that is correct. And that assuming, because you're not an analyst, are you? Assuming you enter your trade properly, you have to execute your plan. There's a whole different set of skills in there, right? That you plan it out and you take the shot. And ideally, it's a low risk, reasonable reward scenario. You never get yourself into trouble, and you usually make money. That's your job, to usually make money. Yeah, and managing the risk, guys, if you portfolio manage, which is a longer term deal here, is, and I don't know if we need to go into portfolio management, but the idea on the long run, if you were a wealth manager, for example, or an investor, if you want to look at it that way, You would do your fundamental analysis and you say, okay, the euro should be weak, the dollar should be strong, the yen is going to be weak, whatever. And you slowly enter one trade at a time. And when that trade is profitable, you move your stop so that you've removed risk totally. Okay? Now you have 100% available margin. You have absolutely no risk. 0% risk. You cannot lose money unless there's a black swan, like you wake up and the Swiss National Bank did their, the big, global lie. That doesn't happen very often. I've only seen a couple of black swans. Okay, but it can happen. So you can't say it's completely risk-free, but 99.9% risk-free. Your stop is at your entry point. You can't lose money, and you are collecting income on the interest payments, assuming you're trading in the right direction for a carrier, right? All right, cool. Then what? You add another one. After a few hours in the trade, you move your stop to break even. Again, no risk, zero risk, 100% available margin, and you do it over and over again. The only risk you actually are facing is that, let's say you're up a couple hundred pips, and then the week opens bad, and it's a big risk-off thing, and the market comes back 200 pips and knocks you out of break even. Oh well, you don't have any trades anymore. You didn't lose any money. You lost some time. You did collect some interest payments. It wasn't that big, but you're doing your job, and you just do this over and over and over and over and over again. And at the end of the year, I'll bet you make more money. Most people that I speak to in regards to their currency trading, like let's say people that I mentor or something, and I'm like, are you making any money? No. That's why they need the mentorship, right? Right? No, I don't make any money. So we know that way doesn't work. Or that they consistently make 200 or 300 pips. Maybe some months they make none, and then they're good months they make 300 pips. All right, so let's say at the end of the year, how many pips do you make? 3,000. So I'm like, well, we need to fix that because that's terrible. And they're like, terrible? Like, yeah, it's terrible. Right? Why can't you make 3,000 in a month? Because you're not doing it right. But again, accepting risk is bad. So that's why you got to do it right. Tiptoe, remove the risk, remove the risk, remove the risk, remove the risk. So anyways, let's move on from this. Let's go through the market. Oh, thank you. Yeah. Okay, reverse to the mean, otherwise known as mean reversion. The best way, or let's say the most common way that I do that is I use a daily chart. Hang on, guys. Dollar's quite strong at the moment. Yen quite weak. Oh, it kicked off that 21. Euro USD, sorry, Euro Yen looks very, very bullish at the moment, but it's slamming into a daily 21. I wonder what that's going to do. Boy, that Euro USD looks good too. Boy, that came down nice. Are you guys looking at your Euro USD? I think it was, 3-4 days ago, we were talking about, the 4 hour way overbought and all that kind of stuff, wanting to come down. Boy, it came down hard off that top. It was a double top. Cool. Of course, what's going on in Europe with the terrorist attacks and stuff can muddy those waters, but anyways. So looking over here now at what you see on the screen, sorry. I got a lot going on. Look at this on the USD yen 15 minute. Just a beautiful kick off that 21. Right? Just a beautiful kick. It's not quite, but yeah, it's in there. Very nice. Just very nice. All right, so let's do a mean reversion idea here. The mean reversion that I typically do is I look at the moving averages on the daily. Okay, and let's look at this big drop here off of resistance. Okay, it went from 121 down to 111. So there's a 1,000 pip move. Okay, and this is a daily chart. Great. The mean reversion part is, imagine at the end, at some point in this day, that was the lowest low. Okay, and we're only looking at this candle here, but you can see that there's been, a change in direction, right? A low relative to this low, right? So you say, aha. So the mean reversion part is I'm keeping my eye on the 5 EMA. And the trick to this too, because it looks easy in hindsight, it's much more difficult, and I'll show you why. You're trying to guess where the 5 EMA is going to be. And that's what a mean reversion is. Reverting, which means going back to, the mean, which is an average, moving average, back to the average. Okay? And it looks easy enough. Sell it at the 5 EMA, which is good. Down, back to the 5 EMA, sell, down, back to the 5 EMA, sell, down, back to the 5 EMA, down, sell, back to the 5 EMA. And that's the reversion part. The trick is the 5 EMA is lagging and is a day behind every one of these. So even though it looks good now, at the time it wasn't there. It looked more like this, like you're kind of selling, and then the new day starts, and then it drops down, but you're already 30 or 40 pips away. Okay? So the mean reversion part is you ask yourself, okay, is the market bullish or bearish? Looks like it turned bearish. And it comes back to the mean. 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 Okay? And this one barely even, it didn't even really come back, and maybe that's why it stretched out too far and reversed. Okay? So very often I'll start the day and I'll say, where are we relative to the EMA? And when you're there, or where you anticipate it's going to be, then you trade in the direction of the trend. So there's a little bit of, guessing here. So you might want to use maybe a moving average on the 4-hour to assume where this is going to be. Okay? But one thing that I do to help on this, okay, are you ready for the tip of the day? When we're still in this day, what I like to do is I like to look at the day's range. Okay? Clearly this was a bearish day. It opened red, it was very red, and then it retraced a little bit. And what I do is I measure the top and bottom, and I identify, in this case it's bearish, right? The 382, the 50%, and the 618. And what I want to do is this. Okay. You may not have been able to see that, so let me change the color. And this is part of trend trading. You identify the trend and you sell the retracement. Identify the trend, sell the retracement. Identify the trend, sell the retracement, right? Retraces, sell it. Retraces, right? And then doesn't. Okay. Okay. And now Is it riding the 5? No. What it has been trying to do is it's reverted back to this mean, this average. Okay? And what it's supposed to do if it's trending is make a lower low. Okay? And as you can see, it's having a lot of difficulty, right? Someone keeps buying it here. Well, what does the 21 predict? It predicts a lower low. So here the 5 EMA is in control. You're very, 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 very aggressive. 5 breaks. Doesn't mean you're a bull. Comes back to the 21. You're supposed to sell here. As you can see, I had it as a range, which makes sense. And it's supposed to make a lower low. Why do I say suppose? Why is it supposed to make a lower low? Because the 21 predicts that it's still bullish and that you should be, or in this case, sorry, bearish. And it should make a lower low. And it's had, really, it's had its opportunity. And it doesn't look like it's going to do it, right? I mean, we're still below the 21, so it kind of has to do it today and tomorrow, doesn't it? Doesn't it have to turn red soon to fulfill the destiny here? And if the 21 breaks, it's going to step up to the 55. Okay? And if the 55 breaks, which it won't do right away, so let's say the 21 is going to break. It's going to go to the top of the range, right? Oops. And it's going to hit the 55. That's where they're going to meet up. So it's just stuck in the range. And then what is it going to do? It's going to come down. And then what is it going to do? It's going to go up. And it's going to go up and touch the 200. Is it going to touch the 200 here at 118.27? No. The future. And this might be in a week and a half. It might be 2 weeks away. So this will be falling over the course of 2 weeks. So maybe more like 116.50. Maybe 116, right? Okay. Eric says, what about the fundamentals? Well, we're not talking fundamentals here, are we? So it's just technicals. Okay. The fact that it's not falling further might suggest something like maybe the repatriation flows back to Japan based on the April 1st deadline is coming to an end. And maybe by April 15th, we're actually way up here. Miles says, how do you know which mean? Well, which means in control. That's where your analysis comes in. Okay. Here you're using the 5. Well, what if here the 5 what if price comes way up here? All right, well then what you're doing is you're fibbing this whole move. And then you're going to sell it off the 21 and you'll be using the 21 as your guide. Okay. The other thing is, like this little move here, I actually talk about this in the book. Was there a reversion? No, not really. What happens is you get so far, so at that time, the 5 EMA would have been way up here. You're so far away, okay? So imagine the mean reversion, a rubber band. You pull on the rubber band, okay? The farther you pull, the more it wants to snap back to its average tension, right? Its tension at rest. In this case, it's the 5 EMA. So it's like one of these things where, you sell it and it snaps back. Great. You sell it, it snaps back. You sell it, it snaps back. All is good, right? But then you realize the more you pull it, the more it snaps back. So what happens if you stretch it, 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 stretch it? Inevitably, what happens? It breaks. And that's what happened here. we got so far from the moving average, so far from the mean, that everyone took profit because they were afraid because they had so much money. They shorted here, and instead of just making part of the day's range and taking profit and then doing it again, they have 2 days worth of profits here. And they're like, holy crap, I'm up 300 pips. And we're at 111. Holy crap. Actually, look at this, guys. It's 115.50. Look, they're up like 350 to almost 400 pips profit. What do? They get out. Pachow. And it comes way back. Because the bears are like, holy crap, man, I just made a fortune. Right? And they're like, whoa, 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 whoa. I don't want to give any of that back. Okay? So I talk about that, I talk in the book, there's lots of psychology stuff in the book. One of the things I talk about is how amateurs lose sleep at night because they're worried about losing money. Professional traders lose sleep at night because they're worried about making money. Or they're worried about the money they're making. And they toss and turn, they go to bed and they're like, I have 350 pips on this USD yen, and it's coming down to that one, getting close on 10. Yeah, it's going to bounce, man. It's going to bounce. People are going to defend it there, man. And they're rolling around in bed. Oh, I got 350 pips. I'm going to wake up, and it's only going to be 100 pips. And oh my God, I already have my, enough pips on that trade for the whole month. Or we're at maybe there's a huge pivot point here. I mean, clearly the market changed in here, right? And people are like, oh, I'm going to give it back. I'm going to give it back. I need to take profit. And they wake up in the middle of the night. I got to take profit, man. I got to take profit. And they're losing sleep because of the amount of money they're making. Amateurs worry about losing, but like if you're a professional, why would you be worried about that? You don't lose. By definition, you don't lose money. Like, that's silly. But when you're making a big, let's say you got 10 trades open and they all just take off. And you're like, man, it's like, it's Friday at the end of the first week of the month, and I've made more money this month than I made all last month. And you're like, I don't want to give this back. You know what I mean? Like, I got to take profit here on Friday. I mean, I just got to. I could take the rest of the month off, and it'll still be a good month, right? So the trader psychology gets in, right? They're like, dang, I got 3,000 pips in the first week. I could just cash out and it'll be the best month of, I could be trader of the month for the firm. I got all that, I don't, and then you start looking for reasons to get out. That's honestly what happens. Because you're like, I got to book this profit. I could take the rest of the month off. The clients won't know anything. And they'll open up the statement at the end of the month. They're like, dude, you got 10% return for the month? Good job. And you're like, yeah, I did it in 4 days and took the rest. It took 3 weeks off. I've been vacationing. Right? Nobody knows. Nobody cares. As long as you book the wins, right? So, that's what a professional worries about, right? And my biggest experience with it is when you carry trade and you got a bunch of trades open. Yeah, sure, you're making money on the interest payments, and sometimes it used to be quite significant money. But then, like I said, when you got like 30 trades open or 40 or 50 or 100 trades open, and all of a sudden you're on this thing and you have a good yen week, and every yen pair is up 500 or 600 pips in a week, and let's say you got dozens of trades open, and you're staring at monthly pivots, like, this is the end, man. But I got 15,000 pips profit right now. Are you dreaming about Ferraris and yachts? Maybe you do, and then you wake up and you're like, oh my God, but what if it comes crashing back down and I get nothing out of this? I have 15,000 pips if I just get out now, right? And you're sweating. You're sweating profusely, like, oh my God. And then everything comes down 50 pips, but you're like, 50 pips times 25 trades, right? You're like, that's thousands. I just lost thousands of pips. All of a sudden you're just like, boom. And you're looking for reasons to get out. Okay? Takes you 6 months to build the position, and all of a sudden 3 good days in a row, and you're like, holy crap. Right? And you're in panic mode not because you're losing money. You're in panic mode because you're finally making money. And let me tell you, if you have a slow June, July, August, so last year, the year before, I mix them up, we had the slowest Forex market in history based on volatility. We had the lowest volatility in ever since it was tracked for the foreign exchange market. Like bad, right? And I focused everyone on just at first we were shooting at rabbits, so we were putting. Great. And if you made 50 or 60 pips in a day, you were happy. High five, everybody. And then we did that for June and July. That's fine. And we talked about that. You got to eat. You got to eat rabbits. If you can catch field mice, eat them too. Just make mice stew. Whatever. Tastes a lot like rabbit. Don't worry about it. And then one day it's like we're just going to, it's August and we're not going to shoot at rabbits anymore. We're going to spend all our time building traps for big game. And that's what we did for the entire month. Well, in September, October, November, December was, 10,000 pip months each month kind of thing. And it's amazing how quickly you want to get out of that because you're like, all right, in June I made, 300 pips. In July I made, 250. August made 500. It was a little better because finally things picked up at the month. And then all of a sudden you're like, dude, did I just make 5,000 pips overnight? You're looking at it like 5,000 pips. That's more than I made the last quarter. And you're just like, oh my God. But you know what? It took that kind of work to build it up. But all of a sudden, pa-chow, you're on the moon. And the next day you wake up and you're like, now I got like 8,000 pips. And you're freaking out. Psychologically, right? And now you think things are good, but you're sweating bullets as you sleep because you're like, man, 2 days ago I made 5,000 pips. Yesterday I made 3,000 pips, and you start dreaming like, I'm gonna wake up and I'm gonna have 20,000 pips. But what if I wake up and I don't have anything? Seriously. And you're like, what if it all comes crashing down? And this is you waking up at 3 in the morning to check your cell phone to like, how many pips do I have? How many pips do I have? And they're like, oh man, I'm giving it back. And then it ruins your night. Or you look, you're like, oh man, I'm making tons of money. And then that ruins your night. And you're walking around like a zombie. Because you can't REM sleep anymore. Well, welcome to currency trading, guys. Nobody said it was easy. Nobody said it would be so damn hard. All right. So, yeah, mean reversion. Well, Ryan, it used to be more insane where you had a sort of a different issue. The different issue, like I coached this one guy. This was a long time ago. I think when I first started, coaching. This must have been 8, 9 years ago. And the Kiwi yen was the big one. and he was losing sleep at night because he had loaded up leverage so much that he's like, making $1,000 a day in interest. And and he didn't have a lot of money in his account. But he was just back then it was like 500 to 1, and you're earning 8.5% on your, but you're 500 to 1, so you put in 1,000 and you're managing $500,000 and collecting 8.5%. You're like, it was insane amounts of money, and then you just kept loading the boat. But an interesting thing happens. The trend takes off, and you have this decision where you're making $1,000 a day and you don't have to do anything, but you're up, let's say, $100,000 in pips, and now you have this interesting problem. Do you walk away from your 1,000 pips, $1,000 a day in interest payments, or do you take the $100,000 now? 100 days. Do you just take that now and run? And that used to be the big issue, because you're like, man, the carry is fantastic, but the pips are way better. And all of a sudden now you're like, which one? Because it's only 3 months, right? 100 days is only 3 months. But you're like, but that's significant money. You see what I mean? Yeah, but see, Ian says move your stop loss, but the point with a carry trade is never get out unless everyone gets out. Okay? And the markets were good back then. Our goal at the time was for people to get their first 1,000 pip trade. And it used to be good. We used to celebrate. People would email me every time they got their first 1,000 pip trade, and we'd celebrate it. And it was important if you're carry trading. So the goal is to never get out, right? Oh, scary carry. Is that out of my book? That sounds like something I'd say. So anyways, we ramble on again, but hopefully you guys like those talks, because I don't know, anyone can do technical analysis, right? So to give you a look at how I trade a mean reversion, if you will, one of my setups looks like, I think it's, is it day trading? Yeah, okay. I have a setup like this. Okay. Okay. And really, to me, this is how I set up swings. Okay. I'm looking at yesterday's low. And I'm looking at yesterday's high. And I have to ask myself, am I a bull or a bear? Well, if I was using pivot points on this, which I am, as you can see, dailies, I calculate the central as well for sentiment. High, sorry, low, right? High, close, divide by 3 gets you here. Not the 50%, the 382. You can see they clustered here. The reason it's not 50%, because high, low divided by 2 gives you 50%. But the sentiment at the end of the day is bullish. Okay? So that's why you use a pivot point. It's a weighted central average. So it's bullish. And what I told you before is, a mean reversion is a pullback into yesterday's trading range. Ideally, you're paying attention to where the daily 5 EMA is, or if you've already broke that, where the daily 21 is, so on and so forth, right? But if this was a candle, what would it look like? The candle, I guess this needs to be green. Okay, let's do it. The candle, what? Would start here, green all day, but where does it close? It closes here, so there would be a small green wick. Okay, there's the day candle. Where's the 5 EMA? You know, we're looking at a 15-minute chart. Where's the daily 5 EMA? Well, at the time, it's going to be down here. Because I'm assuming the day before came down, hit the 5 EMA, and then bullish, right? So where's it going to be in the future? And that's what you're asking yourself here. And you know it's going to be below the high, right? So it's got to revert back to the average. Okay? So your logic here is down and then up off of tomorrow's 5 EMA. So it hasn't happened yet. So that's why I kind of use a setup like this where, you know, are psychological levels important, guys? Like 112,000? Well, I told you that. In fact, I told you down in here, remember, I don't care if it's 111 or 112. You have to play the big psychs on USDN specifically. So is that going to be important to me? Oh, yeah. What about the daily central? Oh, yeah. Well, how about the 382 to 618 Fibonacci retracement of yesterday's range? Is that going to be important to me? Yeah. And how about buying the retracement when it's oversold? Yeah. All of that's good. It's all good. Okay? All good. But all you're doing, so this might be a 15-minute chart, right? All you're doing, though, on a daily chart is you're like down to tomorrow's 5 EMA and we're long and gone. And by the time it happens, you're up here, and what happens to the moving average? You know, it moves up, and you'll find out that you ended up buying at the 5 EMA. Okay? And I love to point this out because it's so important. And for people that don't do it, it shames them. So that's why I love to do it. If you're a bull, that's easy. Okay? That's it. If you were a bull, that is an easy trade. And that's what your trade should look like, guys. If you lost money on this, you're like, well, you know, it was good, just didn't work out. Okay? But a breakout of 112 up to 112.50 and then back to 112, roll reversal, kicker, I mean, that should be an easy trade. And if you had a plan ahead of time and even a bias, catching a roll reversal over, you know, at support when it's oversold in the direction of what you consider the prevailing trend, that's an easy trade. And that's it. And it's only confusing is if you didn't do your homework, right? Like you didn't have a bias. Okay, we're coming up to a new quarter. Last quarter, I asked you to build a presentation you would show a potential investor. You say, over the next 3 months, here's what I think is going to happen, and here's what I'm going to do and why. I am going to do something with the ends, right? Blah, 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 blah. I'm going to corner the market on blah, 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 because of blah, 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 blah. Well, okay, we're coming up to a new quarter. And that potential investor says, you know what? As I told you, I was going to think about it. Send me your trade history. I want to see how, A, how you did, B, how much risk you took to achieve those results, and C, if you did what you said you were going to do. And you're like, oh, snap. I didn't do what I said I was going to do. And he's like, yeah, that's what happens with everybody. So goodbye. Click. I'm going to keep my $1 million, right? Now, what if you traded your plan? Cornered the yens in the beginning of the quarter, sold off the yens at the end of the quarter, made a reasonable return, never got yourself into much trouble. He's like, wow. So that you actually did what you said you were going to do, and you did okay? Sweet, man. That's what I want to see. That's how I want my money managed. Whoa! Oh, oh. Okay. What time is it? Oh, out of time actually. Let me see if I can squeeze one more, and we don't. I've taken a lot of your time, but should we end on Euro USD? Something right in the world today. I don't know what it is. Yeah, okay. I don't want to do that. That's going to confuse things. How about pound dollar? Because there were some big decisions that needed to be made yesterday. Yeah, let's do this one. Decisions needed to be made on this one. Is this the right chart that I should use? Hang on. I need an easy, clean chart. Let's try this one. No, yeah, let's try this one. Maybe that's a bit messy too. Yeah, all right. Difficult one. Okay. Again, it all starts out with, are you a bull or a bear? And you need to know before you open your chart. Bull? Let's pretend you're a bull. And you say, well, I see a bottom, I see a high, I see a higher low, I see a higher high. So what is it that you're looking for? The number one thing you want is support. Okay? Ideally when it's oversold. Okay? It is oversold. Where's the support? Because if you're a bull yesterday and today and maybe even tomorrow, you're looking for an opportunity to buy. If you're a bear, you just sell, 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 sell. Mean retracements, right? So I'm looking at this here, and decisions need to be made. This is a 4-hour chart. And what am I going to eyeball? Okay, weekly support 1, that's a support pivot. Okay, psychological levels, there's 42. Where's 41? 41's here, right? So let's say this is potentially bullish. This was potentially bullish, and you probably were eyeballing it. And you see what happened? The 5 EMA. So in this case, price didn't revert to the 5 EMA. The 5 EMA caught up and then squeezed it down lower. So as a bull, nothing fundamentally has probably changed in your mind. And you're simply looking, right, for opportunities to maybe buy. This 21 was probably an opportunity that you were looking at that time. And you were thinking, okay, this is going to come down, and I'm going to buy the 21, right? Awesome trade. If you got an opportunity on a smaller time frame, great. But it failed. Well, so what? Quit your crying. Okay, so then it broke this. What about 43? What about 42? All these different things, okay? Maybe this on a 15-minute chart gave you a trade, high risk, low, right, kind of trade. You jammed your stop because you know, and then it collapsed on you. Fine. Did you get an entry in here? Maybe, but you know, maybe you took something on a London Open and it just fizzled out really quickly. Okay, fine. But you know, there's no awesome entry, is there? You might have taken some shots. You're like, oh, I'm going to buy the daily 21, right? I'm going to buy it at 44, and it fizzled out on you. Okay, good. 43, no bounce at all, right? Hot knife through butter. 42, okay, it held. 42, it held. 42, it held. 42, it held, and it broke. So now what? Still oversold, right? That's fine, but that doesn't put you into a trade. Now, wouldn't you feel better if this suddenly was like this? And it would make you feel better because the only way for that to happen is for green candles to develop. Okay, and your trade plan would probably be like that. So here you are, you're a bull. And you had some interesting opportunities, right? We were really watching this yesterday, right? Oh, that failed. Now what? Well, that gives you basically a range trade going on here, right? So I wonder what 41 is going to look like. And you're just backing out, backing out, backing out. Excuse me. Projected low for the week is way down here. Well, if you're a bull, at some point you need to stop being a bull. It's getting pretty close, right? So how about that? That's what I call your Alamo. Okay? That's your Alamo. Let's do it like this. Okay, this is your last bastion of hope right in here. And once again, you sit up and you, okay? And it, you know, using the military analogy, I'll call that ambushing. So you're like, all right, well, now, you know, nothing happened today. You got to set things up for tomorrow. Because what's going to happen tomorrow, right? Let's say we are way down here tomorrow. Do you think the bears are going to take profit? The ones that sold way up here and way up here? Yeah, they're going to take profit, aren't they? Projected target for the week. Everything's way oversold. They're making tons of money, probably stretched out from the mean. Right? There's going to be some bearish vulnerability there. Doesn't mean the bulls are going to get in, but you're probably going to get green candles on profit taking. Maybe that's the beginning, right? And then you, on smaller time frames, you start looking for that kind of stuff. And maybe you got yourself a trade, right? Ryan, I don't know if Easter weekend is the models and bottles weekend, but maybe. Right? Because there's nothing worse than waking up at the Ritz-Carlton on Easter weekend and you're just hung over from the craziness of the night before. You wake up Easter Sunday and there's little children dressed up in their Sunday clothes and there's an Easter bunny outside and you know they're hunting for Easter eggs and all the little parents are, oh, my little precious is finding the eggs, and you're like, in the bushes, oh, the champagne last night, woo! Right? Oh, Yves, was that crazy or what? I think I drank too much last night. Oh, sorry, little girl. Don't you look pretty in your dress, Sunday, Easter dress? Mommy, there's a weirdo! Stranger danger! Stranger danger! Shut up, kid. Here's $5. Yeah, no. Easter weekend shouldn't be models and bottles for traders. Yeah, that's funny though. Yeah, well, well, whatever. So, peace on earth, may the best be with you. May your profits be above average, and I'll I'll see you tomorrow. I'll be here. Hopefully, you'll show up too, huh? Peace on earth, may the pips be with you. May your profits be above average. The sun is waking up. Isn't that nice how we do this every morning? Am I recording? Yes. Yeah. The videos will go up here. I know you're probably like, well, you shouldn't record that stuff. All right. Well, I'm a human. So yeah, it'll go right here on the homepage of Forex.Today. And honestly, guys, you should come to the website like right now and leave a comment or feedback or something for at least 3 posts. Right? Share your thoughts. Do something. I mean, something. Contribute to the community, right? Because that's what a community is, right? So anyways, peace on earth. May the pips be with you. May your profits be above average. See you tomorrow.